Okay, good day everyone. This is Mapletree Pan Asia Commercial Trust second quarter and first half FY 25-26 financial results dated 22nd October 2025. Right, we'll go through the key highlights. Right, DPU is the same as first quarter at $2.01 Singapore cents. So it's flat from first quarter. NAV has gone up slightly from first quarter, which was 1.74, now it's 1.75. Leverage is slightly down. AUM is flat. Occupancy is down marginally, right, by 0.4%, and WALE has gone down slightly. Right, let's look at the key highlights. Right, second quarter year-on-year improvement is better than the first quarter's year-on-year improvement, because first quarter's year-on-year improvement, the MPI was growing by 2.9%. In the second quarter, it was 6.1%. Right, so average out first half is around 4.5%, as you can see here. All right. Again, VivoCity is leading the way, protecting the portfolio. Right. Lower operating expense and finance costs. This one is not surprising. Right, it's been this way for a while because of the Anson sale. DPU 1.5% higher year-on-year. Right, I think it's decent, but again, not even beating inflation. And also, I have slight concerns that this may not be sustainable. I'll explain in a moment. All right, and yeah, first half DPU of 4.02 Singapore cents, 1.2% lower year-on-year. Right, so even the second quarter improvement, first half actually deteriorated. Right, so this is fine. I don't think I'll talk about all these things. Again, nothing much to talk about. Okay, so VivoCity again, exceptional results. MPI growth of 7.7% in quarter 2 and 6.9% in first half. Right, so very good results for Vivo. Right, despite AEI. Right, the basement 2 AEI was completed in late August 2025. I think it's slightly better than first quarter, what they predicted, because first quarter I think they were supposed to open up in early September. So I think the AI completed earlier, and I believe that this result for second quarter, right, is from July to September. So that means to say at most they have a little bit of rental in September. Right, that's my suspicion. Right, tenant sales growth accelerated by 4.8% year-on-year despite AI disruption. So now that the AI is over, we should expect this growth to accelerate as well. All right, so VivoCity is still really the stronghold. All right, Festival Walk, nothing to say. Similar to last time, they marketing a lot, but the tenant sales are the tenant sales are still going down. All right, so high footfall, but nobody's buying anything. Right, that's terrible. Divestment of Japanese properties. I think this is their strategy moving forward. Maybe it's a good thing. Right, we look at second quarter results. Right, revenue is down. All right, higher contribution from Singapore properties despite absence of contribution from Mapletree Anson. That means all the Singapore properties have done well enough that even if you minus Mapletree Anson, they are still higher. Right, however, this one got some concerns. I'll explain why later. Right, overseas contribution going down. Right, strong SGD is one of the problems, and anyway, the overseas contributors are not doing well, even without strong SGD, as we'll see later. Right, gross revenue 3.5% higher year-on-year on the Singapore side. All right, mainly due to VivoCity, that's fine. But you see Mapletree Business City, right? There's some one-off compensation income. I suspect it's because tenants left the building early. All right, so this is actually not a good thing. I think this might have boosted their revenue in this case. Right, so this revenue could have gone lower if not for this one-off compensation discussed here. Right, and without this one-off compensation, I think the DPU might not be actually up 1.5%. So the results are not actually very good. All right, or it's not as good as this plus 1.5% suggests. Right, these two things we've already discussed in the first quarter. I won't talk about it. Yeah, the rest I don't think is important. Okay, all these things I discussed before, I won't talk about it too much. Yeah. Right, so if you look at this again, the numbers paint quite a bad picture. Right, if we, okay, South Korea is doing decent, but you can see South Korea is so small, it barely touches anything, right? But if you look at everything overseas, which is China, Hong Kong and Japan, they're all down, right? Even Singapore properties are down, right? If you look at it carefully here, right? Singapore properties are down. VivoCity is up, right? So clearly VivoCity is a good thing, but MBS is actually, I'm not sure because this seems to be including the one-off. So I'm not sure if this improvement is actually sustainable or not. So it's a question mark, right? There's a similar story with the MPI. Okay, so I won't go through it. Right, I'll skip this because we covered first quarter, so no point covering the first half as a whole. Right, this thing first half and first half again same. My concern is I was looking for improvement in MBS, right? MBC, right? So for MBC, although there's an improvement, now I can't tell whether this improvement is actually organic or not because of the one-off payoff, right? So we have to wait for further results to see if MBC actually turn around, right? This is what I'm really looking out for Mapletree, Pan Asia, right? You can see NAV is down, right? I won't go through the whole thing, right? From March, right? Although it's slightly up from I think first quarter. Right, balance sheet decently strong. We talked about this before. At 3 times, I think it's relatively safe, and gearing is quite safely below 40%. Right, in terms of debt renewal, not too big of a worry lah. Only about 9% over the next, I think 1.5 years. Right, nothing much to say here. I want to talk about this. Yeah, so you can see the portfolio highlights. This is VivoCity. Yes, this VivoCity. So this, I think this is overall for the portfolio. Yeah, this overall for the portfolio. So I think this is the shopping side. No, this for everything, including office and retail. So rental revision is down by 0.1%. Right. I think other than VivoCity, not much improvement in rental revisions, and other Singapore properties, that one also improved, but other things never improve, I believe, right? So it's still below 90%. That's not very good, and I think it dropped slightly, in fact, right? VivoCity tenant sales is up. This is really an awesome building. This is really holding the REIT up, right? Shopper traffic don't need to be up, right? But sales are up. But look at Festival, the opposite story is true. I get so much shopper traffic, but tenant sales down. Right, this is the joke, right? And I think they are stuck with this, right? If they are not stuck with this, they would have found a buyer already, right? But the fact that they have to do so much marketing shows that they are trying to CPR Festival Walk, and I suspect nobody will buy Festival Walk. It's a terrible investment, right? So you look at the rental, the commitment level, right? The percentage occupancy, you can see, although MBC improved slightly, still below 95%, so still a bit worrying, right? The rest are pretty decent, right? Japan is a question mark, but they are exiting, so I think it shouldn't be too big of an issue. China, of course, not very high, still hovering there, right? And as usual, South Korea will look at it. This is the point of concern, right? You see MBC rental revision is still down. Only VivoCity and other SG properties are doing decently in terms of rental revision, right? This is the really thing holding the REIT up. But if you look at the actual rental collector, right, other Singapore properties still drop. So my suspicion is that the rental revision, right, they probably tier it such that the initial stages is cheaper, then the later on stages more expensive, but the overall average is higher. That's how they get 5.7%. But this is the period whereby they give discount to the renters. So this is the period where they collect less money. So it's possible that the other SG properties income that we saw earlier, which was down, may improve in the future, right? Given that the rental revisions are going up, right? That's one possibility, right? So if you look at this, other SG properties, right, you can see go down, right? Went down, right? Even second quarter also went down, right? From here to here, and from here to here. Okay, but there's hope, right? That's what I'm trying to say. Yes, I'm done with this. Not going to talk about this. You can see, yeah, I think MBC minus 2.9%, very disappointing. China is very bad, right? And actually, Hong Kong is quite bad also. Right, we just look at their sales. Right, in terms of sales, you can see that the divestment price is here, and this their purchase price. So they sold at a slight loss, right? This one, they made a loss on FX. In absolute terms, it's actually up, but they made a loss on FX, right? So can't be helped lah. So they are losing money on the divestments. So I'll try to, if you want me to do a valuation in terms of discounting the overseas properties, do give me a like, right? If I have enough likes, I'll consider doing a valuation for MPACT right now, even though I'm not very keen on buying more until MBC recovers, to be honest, right? So yeah, that Festival Walk, minus 10% rental revision. This is terrible. They're putting a lot of effort to market Festival Walk, getting the traffic in, but sales are just keep dropping, right? And therefore the rental revisions is still negative. And I don't see a turnabout anytime soon, right? I don't know how to turn Festival Walk around. I don't even think in the near future anything positive will happen to Festival Walk. So Festival Walk is a really big drag on this REIT, right? No matter how I look at it. But yeah, so I think that's all I have to say about the REIT, right? If you want me to do a valuation on this REIT based on the discounted assets of their overseas assets, do give me a like, right? If I get enough likes, I'll think about it. Right, with that, thank you for listening. Remember now, this is financial